how do I use this financial information to my advantage to manage my company and also to compare it to other companies? I can look internally at how my individual strategic business units are doing, one versus the other, so performance evaluation. And I can use these ratios for future planning. I can use these ratios for acquisitions externally. If I look to buy another company, will that acquisition drag down some of my really strong ratio? And maybe I want to avoid that acquisition. Future planning, can my current ratio continue into the future? It's been successful so far. Can I continue that into the future? So your future business planning, strategic planning can use all these ratios. Like I said, we can compare division performance. You can use individual performance evaluation. So you as a director, as a manager, as a vice president may get evaluated on some of these ratios, and your salary decisions will be made based on your performance. And these ratios are used to evaluate your performance. At a certain metric, you may get a better raise and or bonus. Externally, we look at our suppliers. What are their ratios looking like? Are they healthy, right? We want our suppliers to be financially healthy. So we can use these same ratios on our suppliers' financial statements. We can look at our competition, see how they're doing. Not only our competition, but companies all over the world. How does Dell manage their inventory so well and so tight? We know that's a use of cash, so we may want to do something similar to that. And as I said, we may want to use these ratios to evaluate acquisition candidates. Do we acquire XYZ company, or will they drag our financial ratios down? There are benchmarks out there that we can look up. There's a service called Risk Management Associates, and they do all these ratios for different industries, SIC codes, NAICS codes. We look at a company's history to make comparisons across periods. We can show them in number form or in graph or bar graph, line graph or bar graph form. As I said, we can look at standard industrial classification codes, or we can sort these companies by North American Industry Classification System, NAICS. And we can basically go to your local library and look these things up, compiled by Risk Management Associates, RMA. And we can look at peer groups. We can look at companies in our industry category, or we can look at other companies just in general to see how they're doing. What are some of these problems with these benchmarks? Well, companies are different. We can get some general rules which may or may not work in your industry. It's always safest to look at the ratios of competitors in your industry and industry averages to see how your industry is doing. So what are the problems with some of these benchmarks? Well, like I said, conglomerates are very, very different, mix of different companies, and they don't fit any neat industry category. Income statements from global companies differ in regard to their standards. They have international financial standards, whereas we may have U.S. financial standards set by the FASB. Different year-end returns. I ran into a company once that had a fiscal year-end in October, and that may make a difference. Most companies' fiscal year-end ends in December. Some end in June. So you have to be careful with that with using some of these benchmarks. But there are some generalities, like I mentioned, regarding the current ratio, the day sales outstanding ratio, and also the debt-to-equity ratio from Harold Janine. He gave us a metric for what worked for him in his conglomerate, ITT Sheridan. So use these benchmarks, but use them carefully. And that concludes session number 3 of Introduction to Corporate Finance.